Welcome to Common Sense Investing. My name is Cameron, and I'm here today to talk about microcap stocks. And my gosh, I need to start doing a better job than this. This picture is brutal. My thumbnail is terrible. I mean, it's basically, I was talking to somebody earlier about like clickbait and how your title and your thumbnail needs to be so good to attract people to watch your video. And this is what I come up with today. It's just embarrassing. I need pictures of like money and bulls and cash and everybody just making tons of profit just for that clickbait to just say, oh, greatest investor in the world, right? Come and look at me. Although this is, I don't know, what is that? $35 in loonies or whatever. I should probably get a better picture than that, more cash. But instead I go with this. So this is 3 years for me. YouTube live streaming. I've been on YouTube for about 4 years. I've now been live streaming on YouTube for about 3 years, and this is the best that I could do. I am disappointed about that. At the same time, look at my topic. What I am going to talk about today is not only microcap stocks, but patience in microcap stocks. That is going to be the theme of my video. So I have a boring thumbnail picture and I am going to talk about patience. I feel sorry for you already, but thank you for joining. Really appreciate it. I really do. That you could be anywhere in the world and you're here with me talking about microcap stocks. So you are crazy like me. As usual, I have a little presentation for you. If you make it through the presentation, I do Q&A. We could talk about any stocks you want to talk about. But this is my theme for today is patience. I'm going to talk about a few different companies, right? I just released a free article basically on Substack, as well as I released my YouTube video on the same kind of topic, which is 4 gold stocks that I own. So go take a look at that. And one of the things that I am talking about here, I know everybody was excited when gold went up to like $5,600 or whatever. One of the concepts that I'm running with here is I don't really care. Like, it's interesting to me, some people online were like, wow, you really picked the top, and wow, gold has gone nowhere but down since your video. Doesn't matter. It doesn't matter. That's not the point. What I do is in microcap stocks, I look for mispricing. And when gold went up to $5,600, the only thing that was in my mind, I was thinking is, where is the new base of gold? Is it going to be 5,000? Is it going to be 4,500? Is it going to be 4,000? Is it going to be lower? Is it going to be higher? Where is gold going to land? Because once I know that price, I will be able to find some mispriced microcap stocks, not the 10 billion, 100 billion type stocks that every investor is already talking about. I am looking for mispricing. And this video talks about a few of the, I think personally, some mispriced stocks in the gold space or alternative gold space. This is gold right now. It's coming down. It's amazing to me sometimes in stocks, and I should do this more often, right? Especially for new investors. You talk about like technical analysis and what's your favorite indicators, right? Do you like RSI? Do you like MACD? Like, what are you looking at in technical? And sometimes the absolute best thing I could do is just draw a freaking straight line. And it's just like, there's the line. This is where the price is going to end up. It will be interesting to see if that happens with gold, because my straight line basically has gold sitting at around $4,400 to $4,500. Right now it came down again a little bit, sitting at 46.83, right? So I will see if the straight line beats out paid full-time analysts and their predictions for gold. I'm very curious to see what happens here. But at the end of the day, for some of my gold stocks, keep in mind, all I really need is hold that price of $4,000 and I will be interested, right? In saying that, I will put this in the comments. This is a fantastic article. I'm not quite done it. I shouldn't really say that because I'm only on about page 4, but I'll put it in the comments for you. So far, it has been fantastic. This is Adam Wilk talking about massive capital, wrote one of the best letters I've read this year, a must read for metals, mining, and commodity investors. This link is now in the chat for you to check out. If you get bored while listening to me, you could also multitask and read an article. I thought it was pretty good so far, and I'm going to finish it out. So, okay, where are we at? It's interesting to see what's going on right now. Just because, this is to talk about microcap stocks today, obviously, but every once in a while I have to point out something that's just absolutely amazing. bananas in the major markets that affect us, right? And this is one of those things where sometimes I look at what's happening. Like 99% of my time is spent down here in microcaps, looking at microcap stocks. But every once in a while, like that 1%, I'm always watching above and seeing what's happening with the mega caps and the macroeconomics in general. And it's amazing to me how sometimes there's just trillions of dollars just wiped out of the market and then trillions of dollars added into the market. Like sometimes the larger market just trades like a microcap stock. And you can see this here. This is just currency. This is the USD versus the Canadian dollar, right? And you could see where it was. This is a 5-day chart. This is a 5-day chart. And you look at it, you're like, okay, 0.14% change between the USD and the Canadian loonie in the week, in the 5 days. But you look here, it just absolutely crashed. And there was just this narrative, this massive narrative where Trump is crashing the USD and oh my gosh, it's just going to go like down and down and down. It's no longer the dominant currency in the world. And then Trump surprises everybody with an unexpectedly good decision in this fella here. And all of a sudden, look right here, that's when this news kind of broke. And all of a sudden, just a complete reversal. So no pressure here to Kevin, right? But it's amazing the trillions of dollars that changed hands here that was completely changed by one dude, one guy. Now, I know there's other factors here. Cameron, you're an idiot, right? There's all this, there's people that were leveraged and shorted, and there's, you know, all this other things going on. Because if you look at the price of gold, right, you saw some weakness here, you saw some profit taking, and then this was when Kevin was announced right here. So unless there was some potential leaks, which I absolutely think this could happen, you could see here, at least publicly, this was the announcement of the new US Fed chair, and since then gold has been straight down. So interesting though, right? This guy here, Kevin, if you assume that this was caused by leaks and basically gold went from 5,600 to 4,700, you think about how many trillions of dollars with a T was wiped off the market due to the appointment of one dude. That is absolutely mind-boggling to me. Keep in mind though, you know, most of my modeling here is all done with $4,000 gold. So that's why I'm talking about that, right? But moving on, because I don't really want to talk about that all day. I want to talk about some other stocks. I want to talk about Hydrate. I want to talk about Gatekeeper Systems. I want to talk about California Nanotechnologies. Those are kind of the three big ones I'll be talking about today. But if you want to keep these discussions going past this live stream, check out commonsenseinvesting.ca. And that's when you could take a look at my Substack or my Patreon. And either way takes you to my Discord, which is where we do a lot of the research and discussion of these stocks. Quite a lot, like a big part of the day, right? Now, keep in mind, my theme here, patience, patience. And one of the things that I'm thinking about with patience isn't what you're thinking about. It's not just, you know, buying a stock and then waiting patiently for it to get discovered, so hopefully it will go up in price. I'm not talking about that patient 12-month wait or that patient 24-month wait or whatever we're talking about here. One of the themes about patience for me right now is around earnings and how that is working out for investors who actually wait for that information instead of FOMO buying before earnings, but waiting for that information to come in and then making a decision. That's kind of the patience that I'm talking about today. So before I get too much further into this, keep in mind, I am going to specifically be talking about some specific stocks. So it's not financial advice. It's not a solicitation to buy, sell, or hold. I am wrong. I am wrong plenty of times. So this is not like, oh, Cameron likes the stock, I better go buy it. Do not do that. Please do your own research. Please build your own conviction. And if you don't know how to do that, please go consult a financial advisor. Hydrate, Nurse. I haven't talked about them a lot on this channel because the share price just went up so quickly. It turned into, me, in my opinion, it was just a hyped up stock. It was not quite a meme stock level, But man, there was people talking about 1,000% growth and higher. There was people talking about 1,000% growth quarter to quarter. Like there was just these insane projections that I've never seen before in any other company, right? So because of that, I was not that interested in Hydrate. But today, Hydrate just released their outlook for 2026, including some, Q1 2026 outlook here. So overall for 2026, they are saying $150 million of revenue. They're saying that this is their baseline or floor case. So not mid-range, they're saying baseline or floor case. So they are not quite, the terminology is sandbagging here, where basically you provide guidance that is lower than what the market wants to see. But when you beat that guidance, then basically every quarter you're going to be raising that guidance. They are avoiding that with some very intelligent communication here already, basically saying this is our floor case. So, they're not getting any hopes up. So this is a company where investors over the past few months have just put together these unreal price targets or these unreal sales targets in my mind of like hundreds and thousands of percent. The company now is, instead of creating those unrealistic expectations, they're setting some ground floor base case numbers for you. I think that's very smart. When you look at the Q1 revenue outlook, 25 to 28 million right here. So they are currently in their Q1, so this should be fairly accurate. I like this as well, right? Back to the 150 million of revenue in 2026, they're saying adjusted EBITDA margin of approximately 15 to 17%. Go check this number, but I did this quickly right before the live stream. Around $22.5 million of adjusted EBITDA, if that's correct there. And so this is my change. I like it. I like that Nurse V, which is Hydrate, which I'm talking about right now, is looking like a reasonable company again, instead of a hyped up 1,000% growth speculative stock, right? This is turning back into that growing and profitable. And if they achieve or beat this 2026 outlook, it's starting to look like a reasonable company again. I don't mind that. What we've seen, and again with this, this theme of patience, is you see how people just get overly excited here, right? So basically at their price that they were at today, they've kind of been sitting now at these price levels for the past 5 months. Over the past 5 months, this company has been improving and share price has not. Well, it did, and then it went back down because people got higher expectations than the company was able to deliver, and now it's back down here. Go check the numbers, but right now for me again, 2026 EV to adjusted EBITDA. Now, of course, adjusted EBITDA, go make sure you're comfortable with this numbers, what they have adjusted out of here, right? But adjusted EBITDA of under 10, I think it's around 9.3 according to their outlook, and it could go lower, of course, if they beat that outlook. I think it's about 500% revenue growth from the trailing 12-month numbers, and I think from what they're going to do in 2025, I think it's something like 300% growth. So, I mean, it's not that 1,000% plus growth that people were expecting, and that's why share price is down. It was massively overvalued, in my opinion. Now it's coming back down because it's not 1,000% growth, but you are talking about a company with about 300% growth, potentially, according to their outlook, starting to become more of a reasonable valuation. And while maybe not the most profitable company in the world with 15 to 17% adjusted EBITDA margins, maybe they can, maybe that's a little bit low too. We'll see how that goes. So again, with patience, and this is the second time I've mentioned it now, because I've mentioned basically patience here, where I was not willing to go chase this company and talk about it way up here at the highs. I was waiting for, eventually a company will stub its toe, something bad will happen, you'll see the share price drop. I had patience there, but it's interesting to me even how patience throughout the day can change matters. So they released Outlook in the morning. And you could see throughout the day, right up until lunch here, share price actually dropped. So they released what I thought was actually pretty nice outlook. I started looking at the numbers. By about midday, once other investors like me took their time and had their patience, not only was the share price cheaper from the morning release of Outlook to the middle of the day, but after that, once people figured out, at least in my opinion, like, hey, this is pretty good outlook. It's not 1,000% growth, but it's nice growth. It's okay profitability. And I start to, believe this company a little bit more than some of the other things that they were saying. And, patience paid off here as well for people because they took their time reviewing the information. And then once they digested that information and had it all, crunched the numbers, all of a sudden share price goes up. So that's pretty impressive too. That went all the way up from like $3.70 to $3.98, the bottom to top. So pretty volatile, right? Definitely a high risk, volatile stock. But yeah, that's Hydrate for you. Let's compare it. Recently, a lot of people have asked me, Gatekeeper Systems. I don't talk about Gatekeeper Systems much anymore. It's now a $189 million market cap company. I was introducing it to people back at like 18, 19, 20 cents back in like 2023, right? So it's been very successful. Now, what I will say here is a big disclaimer because I think that their CEO, Doug Diamond, is doing a fantastic job. He's doing absolutely everything he needs to do. This company is getting contract after contract after contract after contract after contract. Everything that Doug has promised his shareholders that he would do, he has done. The only problem is he's not really in control of his share price. That is the one thing that is out of the CEO's control. Right? So when you look at the share price, despite the fact that the CEO is doing an absolutely fantastic job, in my somewhat, limited opinion right now, because I don't follow them that much anymore because they went up so high. But in my opinion, once they went up to these higher prices, I just kind of lost interest. Right? This is not my investing style. And again, I have had patience and now share price keeps coming down and down and down and down. So this is one of those situations where I think with Gatekeeper Systems, the company and the CEO is doing a fantastic job. It's just for me personally, the share price, similar to what happened with Hydrate, just got a little bit out of control for me, in my opinion, right? When I look at some of the numbers here, Gatekeeper recently has lost its profitability, so you can't really compare it to any kind of profitability metrics. When you look to price to sales for Gatekeeper, industry standard is 2, they're sitting at 6. Price to book is 3, they're almost at 5, right? The gross margins are on track. All the return on capital here is lower than industry expectations. So, I mean, when you look at some of these numbers and you don't have a lot of great ways to value the company or value the stock, I mean, it's down significantly. This number was much higher. It was closer to 10 times sales. And of course, for people who know me, that is my hard line where I will absolutely not buy a stock is at 10 times sales. So, people are betting on the future. And I agree with that, right? The share price of a stock, what it's doing right now is not as important as the future. However, at the same time with Gatekeeper Systems, you could see this constant, pretty steady growth up where they had okay growth, strong profitability, and then you see how the company absolutely changed. To get all those contracts, they did have to sacrifice. They had to spend more money on sales and marketing and going to trade shows and maybe signing some contracts at a little bit lower margins, and that has caused the company to struggle for a while. And hopefully in the future, they get back to this kind of strong upwards growth. What you'll see here too is a bit of a handover to more speculative investors and hopefully maybe institutions for Gatekeeper, right? So this is what kind of attracts your average or your typical retail investor here. We love these types of things. And then once it gets to this point, we basically say, okay, who wants my shares, right? It's time. I've made some money. I rode it from 20 cents to $3 or whatever it is you got out at, right? And then now it's a little bit wobbly and people are waiting for the next leg up. So at the end of the day, I still really like Gatekeeper. I think their CEO is doing a fantastic job. And I'm sorry for people who are shareholders here, but I actually am happy that share price is coming down. I think that will create an opportunity for new people researching the stock to kind of get in it, right? So those financials look easy to read. What software do you use? That is Stock Unlock. So that's what that was right here, is Stock Unlock is where I pulled that from. Canara, biotech, cannabis stock, right? And again, so I don't own shares in For full disclosure, I don't own shares in Gatekeeper Systems anymore. I do own a very small 0.5% position in Hydrate. So I do own a small position there. I don't own a position here in Cannara Biotech. I like it. I like being able to talk about some of these stocks that I don't own positions in because it's very unbiased. Like the things that I say could be right, could be wrong, but I really have zero bias whatsoever. I don't make money if share price goes up. I don't lose money if share price goes down. So it's interesting here. When I'm talking about patience again here with Cannara, it went up significantly here in July and it's just been consolidating and everybody's been waiting ever since then. This is the revenue. Annual revenue's up, quarterly revenue's up. So you think that the company, it looks like the company is doing a pretty good job, right? You look at some of their valuations, you know, below industry standards, below industry standards, below industry standards. Gross margins need to improve. That kind of sucks. But it looks like they're getting there, right? This was from their recent earnings that they just released a few days ago. New record financial results. 30 million of revenue, gross profit before fair value of 13.5 million or 45%, adjusted EBIT of 8.8 million, supported by operating cash flows of 8 million and free cash flow of 3.3 million. Cannabis company with 8 million of cash flow in a quarter and 3.3 million of free cash flow in a quarter. For most cannabis companies, I think if you told me this, 18 months ago, I would not have believed you. You know what I mean? Like for a cannabis company to get this kind of cash flow is, 18 months ago would have been calling you crazy. But here it is, you get a company that is doing that. Now, when you look at earnings, there is some warning flags here. That's not perfect. You look at some of the declines here in some of their margins, and a large part of that was due to their share-based compensation. It went from 320,000 in share-based compensation, 1.72 million. Also, they're actually, I don't know if it's gone through or not, but they're actually voting to increase their share-based compensation amounts from 10% to 15%, which could potentially, it won't for sure, but could add potentially about 4.8 million shares more dilution. So this is concerning. Absolutely. I'm not saying this isn't like a risk. But at the end of the day here, you get a cannabis stock that is actually producing cash. Like not too long ago, we would have considered this pretty successful. Again, it's not my favorite company. I'm just a little bit surprised, right? On the earnings, they were up here. This is the run up on their share price ahead of earnings. And then on earnings, based on those earnings, just an absolute crash. An absolute crash on share price after these earnings. I think that would typically surprise me. Yes, they have some problems. Was it perfect? No. Share-based compensation kind of sucks. Increasing the share-based compensation kind of sucks. But overall, the company seems to be pretty darn good for a cannabis stock, and yet share price drops. So again, if you're talking about patience, this is a company that if people bought ahead of earnings and just thought, you know what, I'm going to FOMO and I think earnings are just going to absolutely rocket up, pretty rare that that's been happening in 2025 or now in 2026. I mean, not financial advice, because there will be some out there, outliers that do kind of report earnings and maybe share price rockets up if they're good enough. But I tell you, some of these companies in 2025 and 2026 report pretty good earnings. And surprisingly to me, sometimes share price doesn't just hold, share price actually drops. And when you are ever thinking about something, it's amazing how many times you can just go look and you can find an Ian Castle quote for exactly what you're thinking. And this is where Ian Castle is saying that when stocks go up, everyone is willing to look the other way on almost any issue. When a stock is rising, investors pull out a telescope from the closet, climb onto the roof, and look way out into the future to justify paying a higher valuation today. However, when stocks go down, the telescopes turn into microscopes. Everyone focuses on next quarter and all the little cracks in a thesis that were always there and are now obsessed over by everyone. A high share price forgives all ills, and a low share price magnifies them. So that is, I think, a pretty good statement. And in this case, you know, it's not really a low share price. It didn't go up. It just didn't go down. It crashed on earnings, but now it's just people are still waiting. And I do feel a little bit like there's a bit of a microscope taken to some of the minor problems when, you know, previously, if we all said that this was a cannabis stock, you know, 18 months ago, I think people would have been over the moon, right? Now let's compare this to California Nanotechnologies. Holy crap. It's up today, up 1.64%. So you look at their earnings that they just recently reported, revenue went from 1.8 million to 392,000, a drop of 78%, right? Their EBITDA, adjusted EBITDA, down 370%, 190% from positive to negative, right? From basically flat line on EPS to negative EPS. So objectively, just not attractive looking earnings with red flags everywhere. Now they are saying that this is due to orders being pushed to subsequent quarters. So in theory, hopefully this revenue gets realized more in the next quarter. And I think they set up to 800,000 or something next quarter. But you know, if you're looking at now and if you're looking at the past 12 months, right, it's just hasn't been going very well for California Nanotechnologies. Now, this is another one where, you know, being patient, again, this theme, right? It's amazing to me, and similar to with Hydrate and similar to with Gatekeeper, is it's amazing how many times you see these massive spikes in some of these microcap stocks. I feel like as investors kind of forget about patience. And basically, like Ian says, once a share price goes up, people pull out the telescopes and just start looking at the future, years into the future, and maybe not looking at the next 3 months, 6 months, 12 months, which can definitely impact your portfolio a lot more than some people realize. So please have patience, do your research, make sure you're comfortable with price. You know, you look at California Nanotechnologies, you look at kind of what Gatekeeper's been doing recently, trickling down. That looks pretty similar, right? When you look at what Hydrate has done, you know, not quite as down, but definitely down from its highs. And definitely you have to be careful. You have to be aware of what you're buying, what price you're buying it at, and then how much you're willing to be patient. So it's amazing to me, though. Again, 2025, 2026 has been very weird on earnings. This is Canara, right? This is a 1 month chart for Lovely. The stock I just showed you, just the last slide before this one, and then California Nanotechnologies. So this is the company here with, you know, record quarters, but poor share-based compensation, right? And then this is California Nanotechnologies, which just had absolutely terrible, down 300% type earnings. And it's amazing to me when you look at these two stocks, can't really tell them apart. Right? It's interesting when you get people looking at things with that microscope, and you see here Canara was up just about $2 down to $1.70. It lost just about 30 cents off the share price. You know, we had California Nanotechnologies was sitting here at about 38 cents. Now it's down to 31. So yes, maybe it has lost a little bit more than Canara, but I think you have two companies, and it's interesting to me to see, you know, two companies, one with really good earnings with kind of a couple minor problems, maybe major to some people, but it is share-based compensation and not actual, you know, cash. And then you have California Nanotechnologies, which is, you know, down a little bit more, but not crazy more. And they had pretty upsetting earnings, I think, for shareholders. So one of the things that I think Ian forgot here is sunk cost fallacy, right? So the other thing here is when stocks go down, people pull out the microscope and every problem they have magnifies it. That does not happen when you've already lost in a stock. You get that sunk cost fallacy. So when stocks go down, people are also stuck. Sunk cost fallacy is when you keep doing something mainly because you've already spent time and money and effort on it, even though that past cost can't be recovered. So, you know, Maybe I'm being too harsh on Cal Nano, but I just wanted to create that visual kind of showing you how similar the share prices were. I mean, you look at this section right here and this section right here. This is both a 1 month chart, and then the drop on earnings and the drop on earnings versus, you know, pretty good earnings with some minor problems and some like atrociously bad earnings. And to see both of these charts just look so similar, it's kind of scary to me. So, you know, at the end of the day, patience is a form of action, and that's kind of the theme for this video. I think it actually does make sense. And again, it's not financial advice, because I don't want you to watch this and think, well, I should buy or I should sell or anything like that. I just do want you thinking about, you know, the risk you're taking sometimes buying before you get that additional information, maybe ignoring some of the warning signs when things are up here, right? Having that patience to maybe not FOMO buy the top all the time, but kind of wait for that more information to come in. And then once that additional information comes in, sometimes you get that extra little buying opportunity if the information comes in and you decide you still want to buy, right? Like, there are opportunities here. For me, I do like waiting when I can for that kind of clear, transparent momentum, and that does take some patience, especially when you're in a tougher market. I know it's painful sometimes when you're in a tougher market, waiting for that, you know, that easy stock, that stock that you just fall in love with, where everything seems to be trending up and everything looks great. But I think that's where we're at right now, right? Is waiting for those easy pitches and having patience. So right now, it's a hard thing to say, because I feel like we're having patience waiting for earnings season to come. Everything's kind of drifting lower as we're waiting for earnings, and that's always hard to do. But at the same time, I think it's important to look at patience around earnings themselves, right? And you see those stocks just run up ahead of earnings, and then everybody gets disappointed because their expectations were so high. You know, sometimes being patient can be a form of action. So something to consider as we approach earnings season here coming up in March, April, and May. I am done my presentation, so take a little break, clear my throat a little bit, and see if I have any questions from you or any other stocks you want to talk about. All right, let's see what we got here. Hope everybody's doing okay. I'm feeling pretty good right now. Man, I was tired. I don't know why. Monday. Normally, I got to get hyped up for these live streams. Get excited to give people a little bit of a show, right? Appear interested. I can't fall asleep on my own live stream. So sometimes that's hard to do, just because, you know, some days are harder than others. So maybe I should change this from Monday. I don't know. It's February. It's dark. Everybody's miserable right now. When is spring getting here? Hi, odd question. Can you help us find another company like NameSilo? I have a full position in NameSilo, but interested in finding one or two more with something similar. Good luck. Good luck. NameSilo is such a unique company, right? You have a company that's the CEO is Paul Andriola, who is the founder of Small Cap Discoveries, who's arguably one of the best. Not only, like, when you get a CEO like this, not only is he a good capital allocator, but he's also a good investor, right? And so you have somebody in a company who's just being given cash over and over every month from their NameSilo business to go take that money and then either invest it, because they have done that, where they'll invest in a company and get warrants and options and shares or whatever they're going to do there, or they invest that capital and acquire a different company. So, I mean, this NameSilo is such a perfect, like, double threat, like one of those warriors with two swords. You just never know where they're going to be coming from, just because their CEO, Paul Andriola, is so multi-talented. So I can't say that we're ever going to find another NameSilo, because I don't know that Paul will ever have the time to open up another business. It's if you want something similar, go look at Pine Tree Capital. Nowhere close to NameSilo in my mind, just because I have much more faith in Paul Andriola, but they're doing similar things over there at Pine Tree Capital. So that might be one that you're looking for. Characteristics: owner with a track record, wanting to start up a business, steady growth, organic, and a sort of holding company, planning to go to the same route as name silo. Yeah, Pine Tree doesn't quite want to go the same route, but it's about as similar as you can get, where it's got a big name in the son of the CEO of Constellation Software is the person operating Pine Tree Capital. So definitely a big name there, though not quite an identical business. Those financials look easy to read. What software do you use? Yeah, that was Stock Unlock. They're Canadian Stock Unlock, so I don't know what the price is anymore. I started using Stock Unlock when those guys were just getting started, and I got a really cheap monthly price, so I don't know what they charge now, but because I got in early, I still use the software program. Doug did his first earnings call recently, which was pretty positive, worth listening to if you were a shareholder. Absolutely. Yeah, share price was actually trending down on earnings and then going up on the earnings call. So, Doug is the best at interviews. I remember years ago when I was interviewing Doug, and at the end of every interview, I'm like, Doug, you got any final statements? Did I miss anything? What's the last thing you want to say to your shareholders and investors, before I shut down this recording? And every time Doug would just be like, just buy your shares and forget about them and put them away and you're going to make money. And he's like, I'm going to deliver. Kind of similar to like what an Elon Musk does kind of thing. And it was impressive. He delivered, right? He delivered. It took a couple years, but Doug has done everything that he has promised to do. So absolutely congratulations to Doug. It's not his fault that share price got a little overvalued there, at least in my opinion, right? But if it gets discovered by institutions again, their future will look bright. Do you believe URL has room to grow? Yes. So, again, they keep acquiring companies. So this new SewerView has room to grow. They can just keep putting money into SewerView, the new acquisition, and that could be growth for a decade from what I'm hearing, right? The potential here, because SewerView cleans out sewers, right? And you look at, I don't know where you're from, but where I'm from, like around here and even in Canada, Montreal, Calgary, they keep blowing sewers, right? These old infrastructure, all of our cities have old infrastructure. I know it's right across the United States as well. And that's something that SewerView can help with. So it's not just SewerView, it's the fact that SewerView looks like such a good acquisition. You just look at it and Paul Andreola is like, I love doing this. I'm going to do it till I can't do it anymore. I've got 20, 25, 30 years left in me. It's just, you think about another like 25 years of Paul Andreola buying more SewerViews and name silos. And it could be pretty impressive, right? So yeah, hard to find anything like name silo. It just got included on the CSE 25. So it's right in the sweet spot of the discovery phase, even at $1.80, lots of room to run. Yeah. Regarding GSI and Doug, accidentally hit return on that one. I do that all the time. Sitting there just typing away and, wrong button, right? What are the catalysts for URL? I think the main catalyst for me is people understanding what the company does, number one. So there's not a lot of people looking for companies like Name Silo. Like when you get into the retail investor space, I would say most of the time we say, well, the average retail investor doesn't have a lot of time. So we like simple and easy to understand. You get some of these companies, they got one product, one service, it's trending up. You get some information that says this can trend up for a few years and you go, great, this was easy to research, easy to understand, I like it, I'm gonna buy it. When you get a company like Name Silo, it's complicated, right? Like they own shares, or that we had to go through the exercise last week of Name Silo owns Shield Care. The newly IPO'd wheelchair company. How much do they own? What do they own? Like, it takes more time to research Name Silo. You got to go through it, go through the filings. Okay, they own shares here. They have warrants here. They've got options here. They loan these guys money over here. It's harder to understand. And so SewerView, what is the potential? What do they do? What's the potential, right? Where's the best use of capital when you get a company like Name Silo investing in, 3 or 4 different things over the past 12 months? Where where's the future capital going to go? It's a bit of a more complicated business to understand. So if people can understand it, then that would be a huge catalyst in my opinion. And then of course, people understanding and SewerView executing, like showing not only this is what it can do, and we now understand what it can do, but if SewerView starts to execute, that would be another catalyst in my mind. What's my feelings on hash? So that's simply solventless concentrates. That's the cannabis company. I mean, I don't know what to say here. This is a long story with hash. So hash had an accounting, I don't want to call it an error, but they had to change their accounting practices. Investors thought that they were deceived. Some investors thought they were deceived. Share price crashed from 75 cents to 15 cents. And because of that, you know, they lost a lot of trust. And so my feelings on hash right now are that they need to build up trust. And how are they going to do that, right? Well, they need to say they're going to do something and then actually do that thing. And that's the only way they're going to build up trust. So this is when they lost trust. I would argue that they were losing trust before then. And then in the microcap investing community, one of the problems is when you get a crash like this, you're going to get two things. You're going to get a lot of people who are going to try to trade it. They're going to try to buy the dips and then wait for the price to go up and then sell and bring the price down again. Or you're going to get people who held through the crash who want to get out, but they don't want to panic and just do it right away. So they wait until share price goes up and then they get out. And so you're going to, my feelings are you're going to see a lot of selling pressure because it has to climb what Paul would call that wall of worry. Here it is doing it again. Had another little drop, right? Now it's trying to climb that wall of worry again. So my feelings here with hash are that some people will trade it, and hey, if that's your thing and you can make money, go for it, right? Some people bought here at 20 cents, sold at 35 cents. Other people here bought at 10.5 cents, sold it at 18, 19, 20 cents it recently went up to lately. These are 100% moves here almost, right? 80% at least. When you get a stock that's going from 10 cents to 20 cents, there will be people looking to trade it. But if you're looking to hold it longer, you need to understand what the problems are. You need to understand whether or not they can fix those problems. And it's only through fixing those problems that they're going to rebuild trust with investors and actually see their share price go up to something more reasonable and not just constantly get kicked in the nuts by people taking profits at 20 cents after trading it, right? Regarding GSI, Gatekeeper Systems, and Doug Diamond, what do you make of his $1.6 million bonus? Is the timing suggestive of anything? Not really. So Doug, when he was growing this company for all those years and the company was highly profitable, even though the markets were shit, that's when I discovered Gatekeeper Systems. 2021, 2022, the markets were bad. And Doug was not getting much of a salary. So now that, you know, the company is doing well and, you know, it's got massive contracts coming in and it's, by all accounts, it's very successful. I do not have a problem with a CEO and management rewarding themselves a little bit. So, but that's my own personal thing, right? That's different for everybody. But for me, I think that competent people who have shown success in execution deserve to get rewarded. I don't think it's suggestive of anything. If anything, it would probably be a good thing for shareholders because it would probably tell you he might not be looking to sell the company right away, right? I'm not sure you give yourself a bonus and then sell the company. It sounds like Doug just wants to keep pounding away and bringing in contracts. So that's probably a good thing. Yeah, bunch of catalysts here for name silo that Jeremy's throwing onto the page. That's totally fair. A lot of name silo discussion right now. That's fantastic. It just hit 52-week highs, didn't it? Is that why we're having all these name silo discussions? Is when a stock goes up, everybody wants to talk about it, right? Let's see here. Yeah, there it is. New 52-week high for name silo hit $1.82 today, and it held. It actually held. Days range, it held the upper end. That's pretty rare you see that. Normally you see some type of bounce back. So congratulations to name silo. This is such a good example of when you find a good company, you have time, right? Like I made my video in my Discord. It was Scott who found this company, or basically brought it to my Discord at like bloody, I don't know what it was. It was lower than this. It was like 25 cents or something like that. It was pretty cheap. And then I did not make a video on name silo until I think around here. I think it was $1.35 is when I introduced this stock. And I have to tell you, even then I was like, am I just making a video at the top? I had to ask myself that. And I'm like, no, this stock has room to run, right? I like what they're doing. They're not there yet. I'm comfortable making a video. And, you know, it went up after my video. And then even then, you talk about patience. After my video, it went up for a while. We get these down markets. And for people who are paying attention, you think about what a buying opportunity sometimes these little dips are, right? We always say buy the dip, and people groan because it's such a cliche. How many times you buy the dip and it's not a dip? The stock just keeps going down. But when you get such a high quality company, sometimes you do get these true dips here. And then you just see it's been successful ever since. So this is another one of those stocks. I usually pull out like Kraken Robotics, because Kraken Robotics basically just went straight up. And I'm like, see, if you bought here or 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 here, you made money, right? And this name silo, I think I even said it in my video, because my video was around here. I was like, nobody who bought name silo in like the past 12 months has lost money. So keep that in mind when you're looking at a stock like this, right? In the famous words of Charlie Sheen, right? Winners keep winning sometimes, and that's just has to be part of your research in my mind. Could sewer review be seen as another URL catalyst? Yes. Any idea what caused the price jump today on Biorem? No, I actually have no idea. I didn't see anything out there, any news, any information, any CEO interview. Maybe they met with an institutional investor. Maybe they did a presentation somewhere, but I did not see what caused Biorem to go up today. Your story about patience hit close to home. Was looking at Intel, especially a fab rebound. Expectation was high on social media. Earnings dropped, and I was thankful that I didn't touch it. Yes, it's amazing through 2025 and 2026 how many times this has happened, because sometimes you get coordinated, maybe cocky is a better word, in the markets. Like if you look at late 2023 and 2024, if you kind of bought before earnings, if you bought a couple weeks before earnings, you usually made money. There's a lot of stocks that would drop earnings. 2024 was a very good year, and boom, you're up 20% and you think you're a genius. And it was only like the Trump trade, tariff issues, economy down, contracts just poof disappearing in 2025, where, you know, a lot of guys really got caught trying to do the same thing in 2025. I'm going to be a genius. I'm going to buy, you know, a week before earnings, and then it's going to go up 20% on earnings, and you buy at the top because earnings get released, and poof, you know, it's down 20% or it's flat, right? Like it's amazing how sometimes, at least right now, the market keeps changing, but right now in 2025 and so far in 2026, Vision is the only stock I've seen that actually like dropped earnings and went up quickly. Most companies are like dropping earnings, and you've got, sometimes they go down, other times you've got an hour, 2 hours, 3 hours, 4 hours to actually really look at earnings and decide if you like them. And you're not missing out on this like 20% jump. So I do feel like right now is a good time to just be patient, let the information come to you, and then see what happens there. Yeah, so WPR is, I mean, that's a good little stock. I don't know if it's much of a secret right now. Eventually I am going to make a video on this, so I could talk about it a little bit, but this stock I've been looking at for a while. I actually own shares of CanPR here, and you can see this crash. And again, people getting a little overly excited, a little impatient here. The stock went up to like 42, 43 cents or whatever it is here. And now it's released earnings. Again, if you're patient and you wait to see earnings, people who were patient got rewarded with a share price crash. Why did WPR have a share price crash? Well, because they're not collecting anything. Their collections are absolutely atrocious. And yes, their collections are coming from government. However, you know, some people are claiming that the government collectibles will 100% come in. Other people are saying, well, we'll see, right? And right now the we'll sees are kind of winning out. I tell you, if this company collects all their accounts receivable and, you know, doesn't lose more than 10%, then eventually it's going to be very profitable, and it's going to be, you know, hopefully a very successful company, or at least worth more than $7 million market cap. But the challenge is their accounts receivable just is not being collected. So good little, tiny little nano cap stock here. Basically pico cap, I guess, right? $7 million, but they need to collect cash. That's just the long and the short of it, right? As far as good risks to reward, when companies are this small, man, it's potentially it is, but you know, you have to always be careful. I always talk all the time, position size matters more than anything. It's such an unproven little company down here at $7 million market cap. I mean, you literally, I don't want to say anything to like get in trouble or anything negative about CanPR, but I have seen other companies in this market cap size that were just not quite as legitimate as people thought they were, right? So it's always something you need to consider when you get such a tiny little market cap down here, right? I own shares in a company called TXRP, 10-ish year-end earnings and growing. Check it out. I didn't think about Sewerview being an equivalent Buffett subscription fee. Thanks for that, Jeremy. Yes, thanks, Jeremy. Do you like Tribe down here? Has lots of revenue. Yeah, so I actually, I own a few shares of Tribe. I almost feel guilty saying that. It's one of those secrets that you don't tell people. Oh my gosh, you're a Tribe shareholder. Like this company has just that's their 5-year chart. So it is pretty embarrassing to say that you're a shareholder. But in all fairness to me, I think my cost average right now is about 27 cents. It's at about 25 cents right now. So just full disclosure, I am a shareholder. This is a company, $12 million market cap. So that's the same thing that I was interested here. So I'll show you right now for people that have never seen this. 0.3 times sales. Remember, $12 million market cap, so it's even lower than that. You go look at their trailing 12-month revenue, it's $32 million, almost $33 million. Now, the problem with Tribe is they keep struggling to get profitable. And now, is this their fault? You know, some declining growth. This is a company that has software for rental, basically condo sales, right? So when condos were getting built like crazy, the condo developers would hire Tribe, and Tribe would bring their software package into the whole condo. And so people that bought these condos and moved into these condos would be using Tribe software. It's brilliant. I think it's got a fantastic future ahead of it. Unfortunately, they couldn't have picked a worse possible timing to become a company in this sector, because in their main areas of operation in Vancouver and Toronto, condo sales, condo development right now is like zero. Canada is in a major housing crisis that not enough people are talking about, and there is absolutely no construction. So in theory, this company's revenue is at significant risk simply because there is no future construction. Where is their growth going to come from? If you like the company, if you're bullish on it, and why I took a few shares just to see what would happen in the future, is that they're also moving into rentals. So they realized that the condo development is just a dead industry right now, and so they moved their business into rentals. So they're chasing like rental companies and even individual renters to say, hey, we have this fantastic software that, you know, condo units use. We can make this available for you to use. If they can get this rental thing going, I think Tribe could see some success, but The problem here is they just keep running out of cash because they're in the middle of like a super bear market cycling down still potentially in Canada, which is their main area of operations. So glad I got in at share at $1. Paul is such a good eye for these great companies. Absolutely. That's the wheelchair company I just made a video on. It's already up significantly, so yay me. I am finding my first foray into a stock like NameSilo. My first where someone else is managing, finding new companies, having fun, wondering what he will acquire next. I love that attitude. I love that attitude. I do. Because I say all the time, I'm not a shareholder of NameSilo. And the only reason I'm not is like my ego has trouble giving somebody else my money to invest. I just have trouble. I have trouble getting over that hurdle. Now, if I was going to give my money to somebody else to invest, it 100% would be Paul Andreola, right? So I'm always faced with that, you know, do I give my money to Paul and NameSilo, or do I just, you know, keep it for myself and let my ego take over? You know, so far it's been I realize now I have an ego problems. So thanks for showing me Stock Unlock. Looks like awesome software with lots of tools. Yeah, have fun. I bought way too many Zoom dips. Yeah, see, that's one of those, is that you can look at it, right? You got to be careful. So again, you know, when I look at this, that's when I go to this slide here again. When are we going to get momentum again in Zoom? And this is really what's kind of killing Zoom right now, is the market direction for Zoom. This is an ad tech company. Ad tech got crushed in 2025. So it's not just the whole market direction you're looking at, it's the industry sector, and the whole industry sector was down. Is that going to improve in 2026 with FIFA World Cup and the Olympics and the US midterms? You know, I think their annual earnings are going to do good. I think they have a better 2026 than people expect. But the question right now is, what do they do on currently quarterly earnings? Because, you know, the rumor is they had some issues with their largest client. So that's the question there. Now, it is, I agree with you. It's kind of tricky, because when I bring up the chart, you know, you have to ask yourself kind of what type of investor you are, because there's a lot of opportunities here with Zoomed, and my chart isn't going to work. And that tells me when I should basically end my live stream. But there was a lot of opportunities with Zoom to buy a dip, and it wasn't a dip. It just kept going down and down and down. So you definitely, sometimes you have to be careful to look, like, think to yourself before I buy, when is that true momentum shift? And people are buying, expecting that momentum shift to come, and it doesn't, and you just keep losing money. Whereas if you have patience and you wait until you actually see evidence of that shift in momentum. Yeah, okay, you might miss the first 5 or 10% off the bottom, but at least it was the bottom. Right? Like, and you're not buying and it keeps going down and finding new bottom after new bottom after new bottom. So patience definitely helps. Still loving Z-Test because I met Permatech's new president, Shuren. He told me that the reason Permatech's revenue is up after John Perot is that John just wanted to take easy work. That's fair. I'm not super researched on Z-Test right now. It's never been my favorite company, but I get understanding why. Z-Test makes circuit boards, and circuit boards go in everything. So in theory, Z-Test should be a good, growing, profitable company. They haven't been lately because of, we don't know, kind of speculating, but maybe some questionable management decisions, right? And now that they're getting that cleaned up a little bit, hopefully they can start growing profitably again, and then shareholders would be very happy, right? Instead of being a commodity player, it is a supplier to the industry, selling shovels instead of mining for gold. Would be curious on your opinion. I already gave my opinion. All my stocks are there, so I do the same thing. So that's why I have like Dynacore Group. Paragon Advanced Labs is a huge alternative play on metals, because they do the new technology of photon assay, so it's not actually miners. In saying that, I did just introduce Soma Gold, which is a miner, and normally I would agree with you, but in this case I'm not, because I'm looking for mispricing. So I typically agree with you. I'm looking for these alternative type companies in the commodity space. I've always been very successful with that. But the problem with some of these mining stocks in commodities, in gold and silver and copper and anything else, is when sometimes you get down into microcap stocks and they're just so mispriced, they're hard to ignore, right? When I can find a mining company that's going to produce like $100 million of cash in 2 years and their market cap is only $100 million right now, I kind of look at those two things and it's like, how can I not at least put a few dollars into this stock? Like if gold stays at, $4,000, $4,500, and this company's going to produce $100 million in the next few years, that's hard to ignore. So it's definitely got me interested, even though I typically like and love and prefer the alternative plays, which is what I'm doing in Orbit Garant and Dynacor Group. And as my video said, and Paragon, which I own shares in all three of those companies. I also own shares in Soma Gold, and that is one of the few miners that I have in my portfolio. There's a couple others, but keep those secret for now. Sure wants to grow the business and will take on more complex work with the new equipment they recently purchased. Yep. I heard that dilution is a big problem with microcaps. Does your URL have a lot of dilution? No. They're funded. Name Silo is a domain service, and so it gives the company cash. Like they literally have Name Silo, which is just a simple domain company that produces cash and puts that cash into the hands of the CEO, Paul Andriola, and then Paul uses that cash to invest in other things other than Name Silo. Name Silo takes a little small budget because they need to do some sales and marketing, but all that leftover cash goes into the investment of other things. They have not had dilution to date. I would suggest that as Name Silo's share price goes up, the risk of dilution gets larger because they'll probably start using their shares to start buying stuff. But I mean, there will be a compromise there. You will probably get a little bit more share dilution, but it will be for hopefully acquisitions to be happening quicker. So definitely a trade-off there, right? What you don't want in microcaps and share dilution is when companies are just diluting shareholders to pay the bills. That's not usually the best thing, right? Like here's one here I was going to show if I could bring it up. If I can find it, I was going to talk about it, but I ran out of time here, is like NextGel. So I like NextGel. This is a good company, but you could see how I'm kind of having to wait with NextGel because share price has been trickling down. So again, momentum is momentum here yet. It's not. This is also a little tiny $11 million company right now. They have guidance for about $12 to $12.5 million of revenue this year. So they're a little bit under one-time sales. So this is the type of company I'm worried about share dilution on right now, just because their growth is stalled out a little bit. Right? I think their growth starts moving up in 2026, but we'll see if that happens. But this is their cash from operating activities. Now it's improving. I do expect and hope that they get to positive operating cash near the end of 2026. But if they run out of money before they get there, then they could get some share dilution just to pay the bills. You can see here their cash from operating activities went from -3 to -1.59 in the past 12 months. So I'm hoping they get there quickly so there's no share dilution. But yes, this is the type of stock that I would look at for share dilution, right? And if you get that share dilution at these prices, it can be a problem. It can be a problem because you got to give out so many shares just to pay the bills. And then you got warrants usually. Is it a half warrant? Is it a full warrant? Right? So it definitely can have problems. Let's see here. What else have we got? URL share count is going down. It might have, but I don't expect it to in the future. I do expect Paul to start using shares to buy more stuff. But yes, absolutely, it has been going down. Thanks, Jeremy. Is D-Box a decent company? What are your thoughts? Yeah, I like D-Box. D-Box is one of my, well, it's not one of my, it's my #1 stock right now on my Discord, right? So I don't need to hide that. It's been there for a while for me now. This is a really good company in D-Box. We're still waiting to see what happens. It's been sitting here and consolidating. They have earnings coming up soon, like next week. Like really soon, right? So we'll see what happens on earnings, but this is a company that's got a really nice business model where they install the motion activated. Well, they don't sell the seats. They have the actuators that make seats vibrate at movie theaters, right? And so the future of movies in theory is this premium content where you go to a movie to get an experience and not just watch a movie. And so this company is really improving their recurring revenue, their installation base. The more of these actuators that they install, the more recurring revenue they get. So it's a really nice business model. It's been really successful. There's a lot of really intelligent shareholders in it, like Matthew Martin from Ribmont, Maxwell House, who's a full-time investor, right? There's a lot of smart people in D-Box Technologies that are all just kind of waiting for what happens next with D-Box. So yeah, it's a very good company. The risk with D-Box right now, at least in my opinion, is, the CEO is new, and we still haven't really heard from the CEO. Like, what's the plans? What's not just the plans for the next quarter, but what's the 1-year plan, the 3-year plan, the 5-year plan? We haven't really heard that from the CEO yet, so I hope that's coming. I hope that he's been in place long enough that he's kind of got a plan ready, and he could start sharing that with investors, and that would really go a long ways to making me, a little more bullish on D-Box. Though I don't know how I get more bullish, because it's already top of the list for me. So I do like D-Box. That's it. I finally outlasted you. I'm losing my voice, but there's no more questions. There's no more statements. 155 people watching the live stream. That's incredible. Last week, I think I had 270. So a little bit less this week. I think people are... February, people are grumpy. Some stocks are sliding down. And of course, like I said, my thumbnail was so damn bad. I need to get a better thumbnail than that. So I appreciate it for people who watch this video. As always, you could be here doing anything with your life, and we're here talking about microcap stocks. I really, really appreciate it. Good luck out there. Hope we all make some money this week, and I'll see you again next